Just when you think the future cannot get any more bullish, Cathie Wood and the famous Ark Invest released their Big Ideas Report of the Year. And for anyone not familiar with it, it's basically their thoughts, predictions, anticipations that usually provide us with a good barometer of how the industry as a whole is viewing the financial landscape ahead, especially those funds like ARK with a firm footing in the technology sector, which we know has been a huge driver of every market in the recent years. So, having read this report, and let me tell you, it is very, very juicy and getting a lot of people very, very excited about what is to come in the crypto world in particular. I am going to do my best to summarize for you, and hopefully, you will come to the same exciting conclusion that I have. Now, to jump in, they talk about disruptive innovation. And just in case you see me staring off, I have made some bullet points just to keep my thoughts in order here. So I'm not losing interest or going crazy. I am simply trying to remind myself of what is pertinent to talk about. But they talk a lot about disruptive innovation. And they believe that we are going into the biggest tech boom in human history, which for the majority of us who are paying attention shouldn't be that much of a surprise. They described how converging technologies are generating a historic technological wave that will have a much larger impact on our economy, on our global GDP than anything that has come before. So that's a larger impact than the car, railroads, electricity, the internet, bigger than all of that. And this is because we have the convergence of a number of different technologies and developments that synergize very well together. Things like crypto, smart contracts, digital wallets, smart devices, of course, AI, cloud computing. We got robotics, battery and energy storage, you name it, right? We're familiar with all of the buzzwords that have been thrown at us over the last year, over the last 5 years, and they are all converging at one time. The biggest one by far, according to ARK, and again, not really a surprise to many of us, is AI that is apparently accelerating a lot faster than forecasters predicted. With the timeline to when we get that fully general artificial intelligence system that can do pretty much everything a human can do, being dramatically shortened to between 3 to 8 years away, which is crazy. They predicted that the current equity market cap, which is around $117 trillion right now, is going to be eclipsed by 2030 and grow to $360 trillion, with around $220 trillion of that being disruptive innovation. And they think that AI, energy storage, robotics, and public blockchains are going to be driving the majority of that predicted growth rate, which they think will compound at almost 50% a year, which is crazy. That means investing $100,000 now sees a return of over $1.5 million in only 7 years. That's a 15x, which in traditional markets is unheard of. In crypto markets, yes, it's a little bit more feasible, but we've never seen this prediction in traditional markets yet. So, for all of us entrenched within the crypto space already, I know the Bitcoin price will inevitably set the bar for the crypto growth rate as a whole in this upcoming cycle and beyond. They also made some pretty exciting Bitcoin predictions. They outlined some of the major catalysts of 2024, things that if you've been paying attention to my videos, if you've been part of this community, you will already be aware and familiar with. But elements including spot ETF launches that provide a direct and regulated and more liquid way to gain exposure to the crypto market, right? So people can buy and sell Bitcoin through their existing brokerage accounts that has opened and will continue to open the floodgates to a host of new blockchain revenue, being the most successful ETFs in history. And it's only going to continue to grow. They touch on the halving, as we all know, notorious for facilitating those pumpermentals throughout the crypto space. And in a nutshell, for anyone living under a rock, it's basically where the reward for mining new Bitcoin is cut in half. This usually coincides with the beginnings of what ARK call the bull market's mania stage and often results in huge price increases in and of itself. They also talk about institutional acceptance, which again, we've touched on ad nauseum, but is extremely important. This is a huge shift in perception throughout the entire landscape. Well-known folks like Larry Fink going from skeptic to promoter, and as such, creating a seismic about face for many hardcore traditional finance evangelists who've been reticent towards crypto, but are now changing their mind and starting to embrace it. And of course, that taboo word for many a crypto vet that is unfortunately mandatory to facilitate this large scale institutional adoption, certainly in this manner, and that is regulatory developments. Now, this is where things get really exciting. We've seen in ideal portfolio breakdowns from various funds over many years, and for the most part, there isn't really any surprises, right? They suggest allocations to commodities, to gold, a little bit to the stock market, to real estate. We see how the majority of these breakdowns have taken shape over the years. But now, ARK believes that a portfolio seeking to maximize risk adjusted returns. So, this is in order to make sure that you are hedging effectively against risk and not just looking for maximum growth. They have advised an allocation of 19.4%, almost 20% to Bitcoin. This is drastically increased from even a year ago when they would have advised 6.2% allocation or even less. And even that was a large step up from years past. This is huge. If a fund like ARK, positioned at the forefront of technology, is beating the drum that larger and larger allocations to Bitcoin should take place, it's only a matter of time before even the most conservative funds start advocating and executing on the same. Bitcoin is making the transition from what has essentially been a punt in the dark, a gamble, to becoming a steadfast rock in a portfolio to hedge against risk. Now, following on from this, and something that gets the heart racing, Ark came up with some very interesting considerations when predicting Bitcoin's price performance. They looked at what the impact would be on price of an optimal allocation into Bitcoin from the $250 trillion global investment asset base. This is a base of funds already used for investment purposes and currently adhering to older portfolio models with a smaller allocation, if any, to Bitcoin at present. They're outdated. They're outdated models that are, in my opinion, inevitably going to shift a great deal towards Bitcoin, towards crypto exposure in very short order. But to summarize, ARK says if everyone in that asset base allocated just 1% of their allocation, that's almost 19% lower than advised, into Bitcoin, then price would rocket immediately to 120K. Think about that. If the average allocation was just 4.8%, that gives us a BTC price of $550,000. Let that sink in for a minute. And if that wasn't bullish enough, if the allocation was in keeping with their recommended 19.4%, so almost 20%, wait for it, that would give us a price of $2.3 million per Bitcoin. That's a whopping 50x on today's price in Bitcoin, the mothership of crypto that is often viewed by anyone who's been in crypto for longer than a year as the most difficult and slow moving asset within the crypto space, the most difficult to gain any kind of crypto worthy returns from. A 50x. This has seemed unrealistic to many of us who have been in the crypto space for so long. A lot of people seem to be still viewing this new crypto landscape through the lens of cycles past, where we have been reliant upon gambles thrown in from our pocket money to move the needle. We are living in a very different world, folks. This is where the big boy money comes out to play. And those of us positioned strongly in advance of all of this craziness will reap those just rewards that we've been waiting for. Cathie Woods and team also rightly believe that smart contracts are the foundation of the internet's financial system ahead. To quote them, In their infancy, smart contracts are powering a novel financial system that is native to the internet. Ignited by Ethereum, the largest smart contract blockchain, multiple networks are supporting on chain activity and vying for market share. Now, they go on to name some of the biggest players in the space being Ethereum, BNB, Solana, Avalanche, Polygon, Tron, who combined total around $3.7 billion in fees during 2023. They're anticipating that, given assumed adoption rates, yearly fees generated would be in the ballpark of around $450 billion by 2030, creating more than $5 trillion in market value. Now, we all know there are certain other layer one chains on the block that are building a ton of momentum and also vying for market share at an incredibly rapid rate. I'm talking about pulsechain. What do you think the opportunity is for those of us already positioned within that chain, already owning tokens like Hex and pulsex, a DEX that's cheaper and more convenient than anything else on the market, with ties to Ethereum's pioneering chain, having airdropped an entire system copy of Ethereum to Ethereum users, a chain geared towards true DeFi, and a natural haven for the inevitability of everyone escaping traditional banks and financial systems in the coming year, in the coming cycle, in the coming cycles. It's a moonshot level, folks. Crypto is gearing up, as I've been saying, for a monumental bull cycle and some truly monstrous returns for those of us with the patience to ride the ups and the downs that will no doubt occur before we arrive at the product, at the promised lands.